I think you're going to remember today, it's going to be a free nation that we're dealing with. We're going to have a very free and beautiful nation. It's going to be Liberation Day in America, and it's going to be a day that hopefully you're going to look back in years to come and you're going to say, you know, he was right. This has turned out to be one of the most important days in the history of our country.
Today, the spotlight is on the most dangerous trade conflict in the history of American retail. Imagine this: the US president announces the sudden introduction of 50% tariffs on goods from the European Union. In response, major companies such as Apple, Walmart, and Ross find themselves on the brink of collapse. This is not just an economic game, it is a real storm that is already shaking the foundations of the market and changing the rules for every consumer in the country.
There's been a lot of on and off, some inconsistency.
There's no inconsistency. I'm not like a block that just, I won't delay. It's called flexibility. It's not called inconsistency, it's called flexibility.
Within hours of the first reports, Apple's shares plummeted, and investors panicked, trying to rethink the future of the giant, which is worth more than $2 trillion. The president directly threatens the company, forcing it to move iPhone production to the US under threat of huge import taxes. This decision could raise prices for the most popular gadgets above $1,250, making them unaffordable for millions of Americans. But Apple is just the beginning. Walmart, the country's largest retailer, is already forced to prepare for price increases on electronics, clothing, and household goods.
That's a 10. That's a good one. Yeah.
Company executives admit that margins are so thin that they have no choice but to pass on all additional costs to consumers. But behind the scenes, there is quiet fury. Bentonville employees understand that this is not just a trade war, but a direct threat to their survival.
And police in Italy are investigating possible arson after a fire destroyed more than a dozen Tesla vehicles. Elon Musk is calling the incident at a Rome dealership terrorism. This comes as Tesla has been the target of recent protests around the world.
And if you thought that small stores would be left out of it, you are deeply mistaken. Ross Stores, one of the few retailers that has remained a symbol of stability and resilience in the market, withdrew its entire financial forecast this week. The company has openly stated that the ongoing tariffs are already shaving millions off its quarterly profits. Ross shares plummeted more than 10% in just a few hours. This is a wake-up call for the entire sector. Even the most stable players are beginning to buckle under the pressure of the new economic reality.
After Trump imposed those sweeping 25% tariffs on aluminum and steel imports, the European Union retaliating with tariffs on up to $28 billion of U.S. goods. Trump making it clear this isn't over, vowing to respond in kind with sweeping retaliatory tariffs early next month.
Behind this storm are not only economic calculations but also complex political games. The European Union is ready to respond with tough measures, South Korea is demanding exemptions for its manufacturers, and China is again threatening to impose restrictions on U.S. agricultural goods. International trade relations are on the brink of collapse, and American consumers are caught between a rock and a hard place. Every dollar you spend in a store already includes these hidden costs. Inflation is returning, prices are rising, and purchasing power is declining. All of this is the result of policies that could lead not only to a decline in trade, but also to mass layoffs, store closures, and a major restructuring of the entire retail market.
Ready? The higher the tariff, the more likely it is that the company will come into the United States and build a factory in the United States so it doesn't have to pay the tariff.
That will take many, as you know, that will take many years.
In fact, I'll tell you, there's another theory is that the tariff, you make it so high, so horrible, so obnoxious that they'll come right away. When I do the 10%, 10% is really First of all, 10% when you collect it is hundreds of billions of dollars. The numbers that you're talking, all reducing our deficit. But really, so there's two ways of looking at a tariff. You can do it as a money-making instrument, or you can do it as something to get the companies. Now, if you want the companies to come in.
Today, we'll tell you how this conflict is unfolding right now, which giants have already started to lose ground, and what this means for ordinary Americans. From the president's first tweets to the silent decisions in the offices of major companies, here's everything you need to know to understand what's really going on and what to expect next. Stay tuned, because this story is just beginning, and its consequences will be felt by millions. The president's statements in recent months have become truly explosive, and his social media posts, which were previously perceived as harsh remarks, are now becoming catalysts for global economic shifts. Particularly noteworthy is a series of publications in which the president sharply criticized the European Union and major American retailers, directly threatening to impose 50% tariffs, which were to take effect on June 1st. This statement was so unexpected and harsh that it immediately triggered a chain reaction throughout the business community and financial markets. In essence, it was the first loud signal of the beginning of a new era of economic confrontation that will affect all levels of retail trade. Particular attention was paid to statements directed at Apple. The president issued an ultimatum: either the company moves iPhone production to the US, or it will face a 25% tariff on all imported phones. If implemented, this measure could have shifted the balance of power in the technology sector and radically changed the landscape of the consumer market. For Apple, despite its multi-billion-dollar investments in US infrastructure, such demands came as an unexpected blow. At first, analysts tried to understand whether this was simply rhetoric or a real political course of action, but the answer soon became clear. The consequences were felt immediately.
With Elon Musk's views on weighing into very much national politics, national elections in Europe. And then on top of that, when you see the backdrop of Tesla upgrading its product line and the impact of them trying to chase more sales at the back end of last year, that means it's short on inventory. It can't necessarily sell as many vehicles or doesn't have as many in stock to sell. So there is that issue there of a confluence of impacts, which means that sales have been falling. Again, the question is how much more that will impact into February as well, given that the back end of last year in 2024, Tesla sales did slip overall.
Even before trading began, Apple shares began to plummet, reflecting investor uncertainty and the unpredictability of the situation. Inside the company, this caused a real shock. According to unconfirmed reports, the CEO urgently called a closed meeting with top managers and the board of directors to discuss possible scenarios. Insiders said that plans were discussed to urgently accelerate the construction of factories in Texas and Arizona, although it was understood that it would be impossible to meet the conditions set in such a short time. In those circles, it was said that even with accelerated construction of the plants, full-scale US production of the iPhone would not be able to start for at least 2 years, and the tariffs could come into effect in a matter of weeks. Against the backdrop of the tariff threat, analysts began to raise their forecasts for the price of the country's most popular gadget. Experts predicted that the price of the iPhone could rise by 20 to 25%, making it a luxury product unaffordable for millions of Americans. This prospect caused an uproar among consumers and increased public pressure on politicians, but the president's administration remained unshaken, emphasizing the need to bring manufacturing back to the country and protect American jobs. At the same time, Walmart, America's largest retailer and a symbol of affordable consumption, found itself caught up in this economic storm. A few weeks before the presidential election, Walmart's management began warning investors about rising costs caused by the new tariffs. In its financial reports, the company openly stated for the first time that price increases for imported goods were inevitable. Despite attempts to maintain margins, Walmart acknowledged that it would have to raise prices on electronics, clothing, and household goods, especially those imported from Asia, in order to maintain profits.
After weeks of whiplash, Trump threatening tariffs, imposing some, and walking back others, many Americans are feeling the uncertainty. In Swisher, Iowa, distillery owner Jeff Quint says it's paralyzing.
The bourbon industry is going to be collateral damage in this tariff war. I don't really think there's any way around that.
And he's not alone. Tonight, the majority of Americans, 61%, now say they disapprove of how the president is handling tariffs. 56% say they disapprove of his handling of the economy overall. But the president has dismissed those concerns tonight, saying he has the right to change course.
There was a tense atmosphere behind the scenes in Bentonville. According to rumors at closed meetings, financial directors expressed deep concern about the administration's policy, which presents the company with an impossible choice: either sacrifice profits or pass on the increased costs to consumers. It was known that extreme measures were even being discussed within the company, including reducing the product range and revising logistics chains in order to somehow offset the increase in tariff costs. However, Walmart remained cautious in public, not wanting to worsen relations with the administration at a critical moment. In response to Walmart's statements, the president wrote a sharp message on Twitter: Walmart should stop blaming tariffs. They make billions and can cover the costs themselves. China should do the same. This response was met with mixed reactions from the public and economists. Many noted that such statements do not take into account real economic mechanisms and risk jeopardizing the stability of the largest retailer, which influences prices and employment for millions of people. The president's first blow to large corporations was a signal not only to Apple and Walmart, but to the entire retail sector. The third major player, Ross Stores, a discount retailer with a long history of stability and consistency, was the next to feel the pressure of tariffs. The company, known for its ability to weather economic crises and withstand competition, was forced to suspend the publication of its financial forecasts this time around. In an official statement, Ross said that uncertainty in trade policy and the continued rise in tariffs are putting significant pressure on profits and making it impossible to forecast the future.
US President Donald Trump has announced a 25% tariff on all car and light truck imports into the country. It's due to come into effect on April 2nd. Economists and world leaders are warning that it will be a tax on consumers and have a chilling effect on the global economy. But to Americans, Trump paints a rosy picture, predicting that the levies will spur growth.
Investors reacted with alarm. Ross shares plummeted more than 10% in a single trading day, one of the sharpest declines in the retail sector in recent years. Analysts noted that this decline was not a coincidence but a sign of a looming large-scale crisis. Although Ross does not position itself as a premium brand and targets a wide range of customers, even such well-established companies are beginning to lose ground. According to unconfirmed reports, the company was discussing emergency cost-cutting measures, including renegotiating contracts with suppliers and reducing staff in some regions. Against this backdrop, a number of other retail giants, including Target, Best Buy, and Macy's, began to make cautious statements that they too were feeling the pressure of tariffs and were considering raising prices or changing their purchasing strategies. This created a domino effect, spreading alarm from the technology sector to the consumer sector. At this point, it became clear that the president's statements and the introduction of tariffs were a powerful catalyst for profound changes in the country's economy. Support for American workers and businesses turned into a high-stakes game with unpredictable consequences, in which the stakes are too high not only for companies but also for millions of consumers who will feel the pinch in their own wallets.
We begin with the president's trade war escalating tonight. This evening, the retaliation against the United States, Canada, and the European Union responding quickly, just hours after President Trump's 25% tariff on all steel and aluminum coming into the United States. Canada, the largest supplier of steel to the U.S., slapping new tariffs on $20 billion worth of U.S. goods that are sold in Canada. And the 27 countries of the European Union imposing retaliatory tariffs on up to $28 billion worth of U.S. goods sold in Europe.
The conflict that began with a few tweets soon became a real economic test that turned the usual rules of the market upside down. In response to sharply increased pressure from the federal level, Walmart found itself at the center of a political standoff, where the company was forced to balance economic reality with the political demands of the administration. Despite official statements about the possibility of price increases, the situation within the corporation was extremely tense. According to several independent sources, Walmart executives discussed a scenario in closed-door meetings in which the company would have to abandon a number of social programs, including employee training subsidies and expanded health insurance, in order to maintain its margins. These measures were aimed at saving money, but at the same time threatened to undermine the company's reputation as a responsible employer. Internal documents obtained by journalists show that as early as May, Walmart managers warned key suppliers of the need to review prices and contract terms and began negotiations to move part of their production to countries with lower tariffs. Some suppliers, in turn, said they faced logistical problems and delays at warehouses caused by frequent changes to the lists of goods subject to the new tariffs. These circumstances created a chain reaction, disrupting normal delivery times and causing shortages of certain items. In response to criticism and accusations of trying to pass on costs to consumers, the president issued a sharp tweet calling on Walmart to eat the tariffs, while accusing China of unfair trade practices. This position sparked a wave of discontent among economists and experts, who noted that such rhetoric fails to take into account the complexity of modern supply chains and leads to additional inflation, which is particularly painful for low and middle-income groups. Moreover, sources within the company report that after these words, internal discontent and fear of further interference in the business intensified in Bentonville. At this time, Ross Stores, which had traditionally been a model of stability and effective management, found itself facing a difficult dilemma. For the first time in decades, the company's management decided to suspend its financial forecasts, citing the high degree of uncertainty caused by trade policy. Ross' internal reports showed that more than 55% of its products came from countries subject to the current tariffs, and the current rates were already hurting profits by 11 to 16 cents per share, which was critical for investors focused on stable income. This stark statement triggered an immediate reaction on the stock market, with the company's shares losing more than 10% in a matter of hours, the biggest one-day drop in 5 years. Insiders report that Ross discussed plans to cut operating costs, including closing several stores in low-margin regions and reducing marketing budgets. Some executives expressed concerns that without a major overhaul of the company's business model, it could face a prolonged downturn, especially if tariffs remain in place or are tightened. Such measures could lead to massive layoffs, which in the current environment would cause social unrest and negatively affect Ross's image as a major employer. These events were another signal to the entire market that even players that had long been considered unshakable are now experiencing serious difficulties. At the same time, other retailers, such as Target, Deckers Outdoor, owner of the UGG and Hoka brands, Macy's and Best Buy, have begun to issue cautious warnings about the need to raise prices and review their strategies. Best Buy, for example, has reportedly already initiated a review and renegotiation of contracts with suppliers in an effort to minimize the impact of tariffs on the final price for consumers. At the same time, some companies have avoided making direct statements, preferring not to draw unnecessary attention to their problems. Deckers Outdoor has officially refused to publish financial forecasts, citing uncertainty in trade policy, which, according to experts, indicates growing anxiety within the business. Macy's, known for its cautious approach, has begun to gradually reduce the share of goods purchased abroad in an attempt to reduce its dependence on volatile international markets. However, these measures take time, and at the moment many companies are in a wait-and-see mode, preparing for further possible changes. The market reacted nervously. The Nasdaq and S&P 500 indices fell by 1.5% and 1.2% respectively, reflecting investors' concerns about the future of the consumer sector. In addition, investors began to seek refuge in more stable assets, causing gold prices to rise and the dollar to fall against the euro. US Treasury bonds fell in price, indicating that long-term rates are falling and investors prefer to maintain liquidity. All this pointed to growing nervousness and fear of a possible economic slowdown caused by trade tensions. In addition, changes began in the country's warehouses and ports. Companies are rushing to increase imports and withdraw commodity stocks before the new tariffs come into force, which has led to a significant increase in container terminal utilization. Port operators' reports show an increase in delays and traffic jams, and logistics companies are forced to work in an enhanced mode to ensure uninterrupted deliveries. This overload creates additional risks of supply chain disruptions and increased costs, which further affect the final cost of goods. As a result, the retail situation is no longer stable or predictable. Tariffs, which initially seemed like a political tool, have become a real economic problem affecting millions of Americans. Constant changes to rules and lists of goods, which change in real time, prevent companies from making long-term plans, and unpredictability leads to unjustified expenses and price increases. consumers are already feeling the pinch, with consumer spending down in May, fuel and food prices rising, and economic confidence falling for the first time since the beginning of the year. This dynamic clearly shows that the consequences of the trade war go far beyond political rhetoric and are already threatening the stability of everyday life. Retail, one of the largest and most important sectors of the US economy, is now on the verge of major change. The consequences are already being felt not only on the stock markets and in corporate boardrooms, but also in the daily lives of millions of Americans. At this point, many major market players, including Target, Best Buy, Macy's, and Deckers Outdoor, are acting with caution, carefully assessing and adapting their plans to the ever-changing trade policy environment. Target has repeatedly warned that it will be forced to raise prices to offset rising costs, while Deckers Outdoor has officially refused to publish financial forecasts due to the uncertainty caused by tariffs. Macy's is quietly reducing its dependence on foreign supplies in an effort to minimize its vulnerability to global trade shock. Best Buy, according to insider information, has initiated a review of its contracts with suppliers to adapt to the new realities. These measures are only the first attempts by companies to stay afloat amid severe economic pressure, but experts warn that they may prove insufficient in the near future. The markets are not standing idly by either. In response to growing uncertainty and negative news related to the tariff war, the Nasdaq and S&P 500 indices have fallen significantly, by 1.5% and 1.2%, respectively. Panicked investors began looking for a safe haven for their capital, which led to a jump in gold prices and a weakening of the dollar against the euro. Treasury bonds, on the contrary, fell in price, an indication that market participants fear a further slowdown in the economy. Volatility increased in all key segments, and investor fear became one of the main driving forces behind current market dynamics.